Hello. What's the word? Been a while, but I'm back. Been some time, but I'm back. Let's go out to the weekly, take a look. Came down to this weekly sell side liquidity on dollar, so maybe you can see something come back up. Stage one, stage two, boom, join liquidity. Let me see a move up. If we get a move up, then um, our indexes should be going down as well. Be risk on. Let's get that dirty Dow up on here. Yeah, so still low. We went to whatchamacallit over here, fair value gap or optical trend entry. Now I think we're gonna be moving up. So still trying to get to this high right here on the weekly. So this is a bearish short of black on the weekly. Put that there. Gotta change it anyway. So weekly bearish short of black. Sink him globally, and we will lock him. And then we have this weekly high here. Sink you globally. So if we get through these here, then the next objective will be this here. So about 500 points off from this weekly objective. But we keep bouncing inside weekly order block there. See what comes of it. Um, yes, it's kind of on the same path as NQ. Dow was consolidating lower and within its range, so Dow is always going to be like the lagger. No surprise there. Look at dollar flexing on this bullish order block. See, get some accumulation, move up higher. Um, Took out previous day high this morning, so we're going for internal range liquidity. Potentially this daily volume imbalance there on Dixie or on NQ. And then we also have where we're coming from. We can measure that out, see where we're going. But again, this weekly order block here, it's a good objective to hit, retrace now, back in today's range. We have quite a week this week. We have a new driver at 10 o'clock, so won't be looking to take any trades until after 10, which aligns with the 4 o'clock reversal. So yeah, we just accumulated. We had the small little volume imbalance here on ES, so running there, and now we're coming back down. So playing a PD array game, it's kind of like that. I don't know why this is here. Yep. So this is number 3. I was playing around with some alerts yesterday, trying to get them to work, but I ran out of time. Diagnosed errors. 4 o'clock. These are old. They were valid at some point, but they're just old. 4 o'clock, a lot of shit going on. I was during the trade tariff shit, so this is our most immediate price leg here, and now we're just accumulating, accumulating, accumulating. But we can repurpose this here. This is a possible low. Though for us to get there, we would have to go through this new week opening gap as well as this new day opening gap, which we already touched. We touched the midpoint of that already. Wow. Um, so we are in a discount, given that this is our immediate price range. right there at optical trade entry. So this could go long here. What we could see is what we could see here is we could go low here. In fact, I'm trying to, yeah, so we can ignore that one. I was long earlier yesterday. We were profitable by like 30,000, but came back on us and took us out here. So what I will do with this, this is like a swing trade. I like where we are, and so I'm just gonna go along here and I'll put my stop loss like right here at 318, a little bit lower. But I do want to take these sides here. I am bullish on the week, so we can exit out of this. Yeah, but what we could happen is open up 10 o'clock, come down here again, maybe the constant encroachment of this wick here on the 4. High of this new day opening gap, optical trade entry, continue moving up higher. Or, we do have this bearish order block here, which goes against my idea of being long. So, oh, this is perfect. This is 1.5. It's perfect. Good idea for an entry. Because we took out external range liquidity, went into internal range liquidity, optical trade entry, new day opening gap, 1.5 STD, and then, yeah, move up higher. So, this is a good area to go long if we're going to be swing trading, right? So, anyways, so that's that. I don't want to sync this, but I'll just sync, keep that there, and then all right, here we are at 1 hour. Notice how we came right down to constant encroachment and the low of this fair value gap. Then we could ask, oh shit, that's hot. Where did we go to? Almost a 4 standard deviation, so good retracement. We did this already on the 4 hour. This is what we kind of like what we got. If you take the last one, it's kind of what we got. So those all line up pretty nicely. So let's see a market maker model here. Look how we came with the constant encroachment of this new week opening gap here. Boom. So at one point this was green, and this is fair value gap here. Go short there. Boom. Look at the 5. So we have a market maker model here. We have all this accumulation. Just took out the high last night. Accumulation. I try to go long here. Yeah, I think there is where I try to go long, but didn't work. And then we kind of have stage. We didn't take out that low there. All this here is just accumulation. Stage 1. Boom. So we have a 5 candle run on the 5 right in here. Coming out of this new day opening gap. So possibly a move up here. Good 50 points. Uh, but we use that lower time frame for like entries. Which is what we just did, so that's valid. R15. So that's where it was at. We have to see if this is immediate. All in all, I just like the fact that we are where we are, so it's good. Um, Question is, if we were to go long here, where would our stop loss be at? Here's a 9:30 open. So could see a move up here. Let's take a look at this immediate range here. Other way. So could move up in here. Boom, hit that. Come lower. This is a huge 5-minute wick, so we'll see. We shall see. You have a 15-minute bearish shorter block. We want to see this be violated. For us to remain long. I mean, we could just run up there, then, retrace back into this little range here, which, the immediate price leg will be from here to here. So for the sake of anticipatory skills, be something like this, coming back down here. Right, there's no inefficiency down in here. Maybe on the 5. See how we came down here, boom. Now I'm over the, I'm actually on the wrong chart. There we go. But wait, I just lost everything. Yeah, man. This is where I was doing all my charting, so it's all good. We know where we're going to. So we have 2 screens. There we go. Sometimes we just go straight to our target. Sometimes this happens. And the best time to do what we're going to do here is usually during the macro session. Mm. So given that price, it's kind of like this holding pattern, accumulation, manipulation, type of thing. Uh, we had that 10 o'clock news driver coming out, so it's best that we just hold tight and wait. So we may just have a lot of accumulation here around this 5 minute OT. We got like 20 more minutes left. So all kinds of shit's gonna happen until then. And it's just gonna be boring. Here's a 9:30 open. 30 seconds left in this five. See where the body ends up at. So we came down to the new day opening gap on our on NQ. Shut there. Bounce along there. Look at that down back grain. 145. Now we're coming up. Boom. LT. New five. I'll take this. Jeez, double click, right? So we can reach up here. Stop loss. Be here. Well, that is 1.5 standard deviation. All right, stopped out. If it's gonna work, it was gonna work. What else where we went to? 1 standard deviation. So yeah, I wanted to pull the trigger on that one. Let's try it again. See if we can get that back. Look for a better textbook opportunity. That is a fair value gap down here. Possibly a breakaway gap here on the one. Wait, and then the other one would be this would have to be lower. There we go. To account for this fair value gap right here. 2 minutes left. I was hoping this could be like a change of state delivery on the on the 5. If it is, it's where we can possibly go to. See if we can inverse this here on the 15. So I do know this is a retracement level. I want to see us to move past here. So we could get a retracement back down here and then move up higher. If that's the case, then I have more conviction that we can come up to these levels up here. All right, I moved my stop loss to break even on the day, which should be here. So close on the 1. So notice that we moved it within this wick here. We could get a fair value gap here. Next candle could come in touch within this fair value gap. So 200 ticks would be 50 points. It's my daily goal. Let's see if we can come out to this new day opening gap up here. So we are at 1 standard deviation on the 1 or 5 minute. All right, now we're in the minute. Let's see if this fair value gap right here wants to hold. I would like to see it hold, but again, this is where we are on the 5, so it's just a valid retracement level. And then we have a small little inefficiency up here on the 5. So we're right on the 1. I don't know why it's not sinking. Whatever. All right, so we start 50 points. So this is a lock in profits. Retraces history, that's cool. Oh, there it is. So this makes up from last night and today, and we're stopped out. Go ahead, hit it. I don't care. All right, so we're out there. Still got a runner going on. Oh, we could have a runner going on, but that's it for me for today, at least for this AM session. Do I believe we'll get more in this run? I need a new computer screen. So very good. So we made up for the profits we lost last night, and the loss that we took this morning that we ended up getting back. And so we're up. P&L's at 32 bucks. So that's cool. See, there we go. Came down. Whatchamacallit, immediate price balance right here, and now we're moving up higher. So we did take out this drawn liquidity here. This is internal range liquidity. So after taking that out, we went to internal range liquidity. This would be like more valid on the 15 to take a look at. See that big ass fair value gap. So after you take a high time frame or higher time frame liquidity out, it's best to go to a lower time frame to look for any inefficiencies like we have here. And this is also a OT, boom, moved out there and moved up. So right here, this is a valid entry. Boom. You want to wait though, 15 seconds. And then we have this bull shorter block right here. Put your stop loss down here. So this would be for like a 9 point move, almost 10. It'll be 40 ticks, right? And we are at a new 5. Look at that. So that would have taken out my objective. Very good. For standard deviations, we're coming to on this breakaway gap on the 1. What got me in this trade was what took place on NQ. Came down to that new day opening gap. And I was anticipating a 5-minute bullish shorter block, which we got on both NQ and on MNQ. And that kept me in, measure that out. Here we are at 1.5. Buyers are kind of respecting it, so we have 4 minutes left, but I think we're going to go up higher. And I have my projection here, down there perfectly. And yeah, so that's that. Typically, I don't take moves this early in the morning, especially before a news driver. But given that we are here where we are, new day opening gap to new week opening gap, just made sense. Anyways, we did it. So we can stick around to 8 o'clock, see what we'll get here. It's for my trades. Took one last night, right here. Came down, new day opening gap. I took a trade entry, but didn't work, which is fine. But this is what worked today. It's a 15-second. I will admit I did chase this one here, which forced me to have a higher stop loss, which was only 20 points. Oh, 22 points. Could have afforded more, I think, like 25 points. So call it 60, going out at 30. Yeah, we could have afforded more points. So here's 30 points right here. 35 will be right here. And the low here is, yeah, it's about 25 points to the T. Um, so had we, saw this as a This is a valid market maker buy model. Entering here would be ideal, but how does this look here? This looks similar to anything that we have here. Not really, but we do have this low, high, lower, low, bearish shorter block, come down, tip it. And this is also kind of like a five kind of run. One, two, three, four, taking out drawing liquidity here, coming out to this bull shorter block right here, to the T, fair value gap. So doing a better job looking to the left, you know, see how we're supported here. First will be right here, but then right here, bull shorter block, run up, one, two, three, five, kind of run up, back into this fair value gap constant encroachment. Bodies are respecting. Could see a retracement going down lower. Anyways, so we came down to this fair value gap here. Bodies respected it perfectly. Kind of wick down below it again. So seeing this market maker model. So we have our drawing liquidity here, market structure shift here, another market structure shift here. When it sees bearish shorter blocks up here, which is cool. Now what do you want to do? Come down to internal range liquidity here. Ideally, optical trade entry would be the place. Let's see. Still in the premium, but if we measure from this one to this one, that's where we are. That's where things align. So going in small here, run up, accumulation, and then we just take off. Time was like 9:43. Um, so I ended up getting back in at a little bit lower for 55, or 55.70, and then we ended up getting stopped out at 507, which is 507.25, which is here. So got 50 points out of it. We were going up here to get almost 100 points out of it. Overall, good trade. Made back what we lost here when we lost over there. So, good deal. Notice how you went right into this. Do 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 do. Good deal here. Let me get rid of this. See how we went to first variation of this breakaway gap here? Almost kind of a breakaway gap. But we can also look at this bullish shorter block here on the 1, 2, right? Boom, perfect to the T. That's what I was looking at. Boom, put it to the T. That's why I do what I do. That's why you do what you do. All right, so that's the 1, and then on the 5, this might be an area to get in at to continue going longer. But don't have a good read on this one, so I wouldn't consider taking it. Although we are still bullish on higher time frames, so one of the things you got to take a look at. It's like, are you still bullish on higher time frame? You put your stop loss like right here. It's so scary. I'm giving up points, but hey, look how we're blowing past this 15-minute order block. That's what we want. Bear order block. That's what we want. And then we have coming out of this, touch of that fair value gap. And still moving up higher, my estimation. You like this 50 to 5-minute bullish short block coming up here for these sides up here, right? And we could very well get there too. It's like, damn, we could have gotten there. Like, yeah, man. But little by little. Look how the bodies are respecting this. Something to look out for. If we like inverse this, then that gives support to get through all this here on the 15. Because like if we can't get through this, then this 15 minutes is gonna act as what it is. So and look at this breakaway gap here on the 15. Look at this 15-minute bullish shorter block. So coming out this new day opening gap here within a deep discount as we looked at on the other charts, you know, it's still bullish. Right now we're just accumulating, accumulating, accumulating. Um, so that's why things look the way that they look. And 2 minutes to this new gyre come out, maybe come down lower down here and then blast off or just completely collapse and come for these lows down here. And that's the thing about the 1 minute, right? Like it could be fickle, but you want to allow price to get to a higher time frame. Point of interest, then you go down to your one after you investigate your five, and you do what you do. Now, coming out of like here is a great example of why we, wait till we get to our time. Like now you look at this fair value gap, boom, bull short block, boom, projection, boom, all that's valid. But when we get up here, when we hit our objective, though this is on the 1 minute, which is in confluence with the higher time frame, see draw liquidity here. That's when you kind of back off. But then you look at it on like the 5 minutes, like, hey man, all we're doing is retracing back here, which is valid. That's on the five, not the one. So you look where on this five can we retrace back to? You got this area right here. Now we look down, 5 minute bullish short of black is right in here. So we keep coming down here, right? And then we also have OTE here. It's not perfect, but it'll do. Right in here. OTE right in here. So let's take a look at this. I like how we just went up to two, drawn liquidity. That's another thing I've been looking at. If it's like 2.5 alignment with like a drawn liquidity and you have another fair value gap here, and then price can go there easily. All right, here we are at 10 o'clock. Boom. Uh, New day opening gap. Equilibrium. Bodies respecting this fair value gap. Watch. Some shit like that will happen. Oh shit. I don't know why that happens. So we are in the new four. Here we are in the new four. Look how we went to on the 15. Here, boom. This has been inverse, so we're still bullish. Here we are, 4 hour, still moving up higher. See if we can now to this equilibrium. Come down, touch here, move up. That's what I can see. Go, 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 go. There we go. Still want to see these highs up here be taken. Blow through this here. Get to that and rest that officially. Then we have this. That we're working inside of. Gotta get through that. Alright. So why is yeah. Maybe we could get a blast off here at Q4 expansion. Still bullish. Don't let this fool you. Still bullish on the high time frame. You feel me? But these types of moves here, they ooh, staring at it, staring at it, staring at it. That's when we have to like detach, right? One, two, three, four, potential 5 minute. Whatchamacallit on the 15. Anyways, I'm gonna keep this recording up and running. I gotta get myself ready. Head to the office. There we go. So where we first got in there, that's like valid for, you know, getting out. Look at this accumulation. I think we're looking at this one, right? Yep. I didn't catch it. I wasn't looking for it. Yep, there we go. 1.5, boom. Fair value gap holding. Equilibrium on the 5 minute, and then take off. Get the 5 candle run on the one. Got past that. So now we're coming up for these highs up here. And the way that looks on the daily, after we hit internal range liquidity, look how we went to customer crushment here. That was earlier though. And now we're coming up for its Asian session highs. There you go. Asian session high. Asian session highs. Still going up higher. And look how we performed here on the 4 hour. 10 o'clock open, boom, chop down, boom, take off, as I suspected. See, we done this before. You done this before. Moving up slowly, nice. Moving up. That's good. It's real good, man. Happy for you. You did a good job today. And this is my objective. So here, I added alert here. Just to let y'all know. Low, high, lower, low. Run up. Took that drawn liquidity out. Came in, turn range liquidity. New day opening gap. Accumulation, manipulation, distribution. Came down to 1.5 of this bearish order block here. Fair value gap holding. You can announce this here, this high here. Boom. Um, Equilibrium of this here. Buyers respecting this one. Retracement level, which is advisable. Boom, take off. All right. It'll come down here, high this new week open gap, as well as this inverse fair value gap, as well as this fair value gap here on the one. All right, anyways, you can review this later. Today's date is April 29th. I'm about to go. Peace.